space. But as promised, Bluspring Enterprises, has been in focus, and this is on the back of the news flow coming in. Now, this company was demerged from Quest Corp in March 2025 and is basically India's integrated infrastructure service provider company and operates across food services, facility management, and hospitality. The recent news coming in, of course, they are now entering into aviation catering via acquisition of LSD Sky Chefs India. And to take this conversation ahead, to understand what this acquisition means for them, what lies ahead of the company, we're joined by Kamalpal Hooda, who's the Executive Director and CEO of Bluspring Enterprises, joining us now. Sir, thank you so much for taking out the time. My first question to you is with regards to your recent acquisition coming in. This marks your foray into aviation catering, if I'm not wrong, through LSD Sky Chefs. Just want to understand as to what this means for the company. What does this bring onto the table, and what is the kind of revenue potential that you're looking at from this acquisition?
Sure. Thank you, first of all, for having me on your show. And yes, it's been a very important acquisition that we've just announced. In fact, we've actually announced 2 acquisitions in last, less than a month, and happy to share update on both the acquisitions, starting with LSD Sky Chefs, which operates, aviation catering kitchen at the Bangalore Kampagoda International Airport and caters to, 1 domestic airlines and 3 international airlines. It is a segment which has got an entry barrier, and Bluspring, as you mentioned, is already into food services. So we do have food services right now in various industries, starting with, very large premium education institutions where we cater to, students. We also have presence in 100+ hospitals where we do patient food. We also work with very large industrial houses where we do industrial canteens, food for the labor that they work there, and also through central kitchens we do food at large corporate houses. And now, obviously, in a premium entry barrier segment and a niche segment, which is aviation, we've got entry through this acquisition. So food as a portfolio with this acquisition should do close to around 500 crores of annualized revenue. This particular acquisition will come in with around 120 crores of revenue. So in total, it will be 500 crores of revenue and high single digit or low double digit EBITDA margins. If I talk about the second acquisition that we did, which also we announced within the span of last 1 month, was another German company which was selling its Indian business, which is STIAG, which is an operating and maintenance partner for very large Indian companies in the power plant space. So they manage close to around 7 gigawatts of power plant operations, and through very high technical competence, they operate again at very good double-digit EBITDA margins. So both these acquisitions add up to the Bluspring capabilities in the industrial space and also in the food space, which have been areas where we've been interested to grow. On the back of these 2 acquisitions, we believe we should in FY27 be a 4,000 crores plus revenue company. Our EBITDA margins, which we were reporting prior to these acquisitions at around 3.5%, should be close to around 5% EBITDA margins.
Right, sir. Right. Okay. Now, this is all about this acquisition. Now, if you could just take us to the contours, the financial contours of this deal. 129 crore, I believe, is the enterprise value. What is the equity value, and how much debt is coming into the books of Bluspring?
Yeah, so see, these acquisitions, both of them are going to be partially funded through debt and internal accruals. Specifically talking about LSD, we are yet to do the closing. We've just signed the SPA. So right now the enterprise value is 129 crores. The company, like I said, at 120 crores of revenue, does close to around 20 crores plus of EBITDA. And, the equity value should probably be in the range of the enterprise value only. However, like I said, closing should take another 60 days when we'll have, very exact values.
This is largely a debt-free company? Largely?
Yeah. This company comes with, a starting cash of around 20 crores. So yeah, it's a debt-free company.
Okay. And you said the operations are in Bangalore. So just wanted to understand this. Do you plan to expand LSG's operation to other major airports as well?
Yes, of course. That's the intent, and that's why we've entered this segment. So, Bangalore itself has got 2 kitchens, and one is with obviously competition, and the other one is what was available. So we took it, and on the back of it, not just other airports, we want to get into aviation kitchens. We also want to get into lounges, which is also a very premium business. We also want to gradually getting into aviation also allows us to have a look at the MRO services, which is also a very big market, and which is something that we have not done. So we have an engineering business. which is also back of the STIAG acquisition, should now cross 1,000 crores in revenue. And, this entry into aviation then, exposes us to one more adjacencies in expanding.
Sir, with regards to your core segments, facility management and security, etc., are traditionally low margin businesses. But when it comes to your guidance, you've said that your services like security services could go from 2% to 6%, anywhere near that 6%. Just want to understand from a slightly long-term perspective, let's say 2 years down the line, where do you see your margins go, considering all of these acquisitions also into consideration? And if at all you're penciling in a growth, would that be a structural change that would come in?
Sure. Thanks for this question. See, security, since you mentioned that, let's start with that. It's been a low margin business for us. But last year itself, post the demerger, we worked on our margins and moved from 2% to 3%. And very hopeful that, said we should move from the overall consolidated operating margin of 3.5% with these two acquisitions and integration done. We should be touching close to around 5% EBITDA margin. So we are there in our trajectory of reaching 6%, especially with these two acquisitions. And also on the organic businesses, there's a lot of digital integration being done to, push for margins. Since we spoke about security with now almost 24,000 security guards, a lot of digital security surveillances that we are doing, which are better margin businesses. Also mapping our entire employee base of 91,000 people digitally and monitoring them digitally, their attendance digitally, is also bringing down our cost to serve clients, and which is also helping us margin. So on a combined basis with these two efforts of acquisition and the organic efforts, we should move more near to 5% once both these acquisitions are fully integrated.
Okay. And trailing 12 months, you're right now sitting at a top line of around 3,300. What is the kind of internal guidance that you have in terms of FY27 top line growth?
See, FY27, internally, we want to cross 4,000 crores. And FY28, we want to cross 5,000 crores. So those are the two milestones that we have on top of our mind. And those are the numbers we are targeting.
Thank you, sir. Thank you for joining us and giving us the way forward for Bluspring Enterprises. Let's also welcome in our fundamental guest, Tapan Doshi, research analyst at CA.